The stock market has been absolutely racing this year with stocks like SoFi, Palantir, NVIDIA, Tesla, even SoundHound in the last couple months flying to the upside. Actually, it's been so hyped up that it's reminded me of another year just a couple years back. It's almost the exact same mentality in the market right now that we had back in 2021. Now, there's a couple key things I'm going to outline in this video that I see really similar parallels between what happened sort of Q2 onwards of 2024 and what happened in 2021. We're going to talk about a couple of the key things that I think we can learn from 2021. And then we're going to talk about my prediction for what exactly is going to happen as we go into 2025. And will we see another top the same way we did at the end of 2021 with a deep retracement coming in the next little bit? My name is Liam. Welcome to Golden Larch Investing. On this channel, we talk all about Canadian investing. And today we're really talking about the general market. So I'm not going to be too focused on Canada. Instead, we're talking about the general market. Most of us own US stocks. Almost all of us have seen US financial media recently. It's been massive. I've got a couple notes here on the screen, and I'm going to reference them a couple of times. I think it's really interesting because as the year has gone on, there's a couple of really interesting things that have gone on. So I'm going to start with 2021. I want to outline a couple of the things that were the sort of defining moments, in my opinion, and as well as a couple of things that sort of had the biggest interest from specifically retail investors. Now, a retail investor, of course, is anybody who's not part of a big institution. So that's me, that's you, almost every mom and pop, right? We're almost all retail investors if we're investing our own money ourselves. Now, if you put your money with an advisor who works at a bank or something, now we're not talking retail anymore. So these are people who are actively investing into the markets. And particularly if you're talking about stock pickers, you're probably talking about retail investors, right? Like that seems to be pretty hand in hand. Now, a couple of the things that happened in the story of 2021, basically we have a huge hype cycle that builds. We have these like massive risk on assets that go to the moon, to use some terminology from 2021. And then we end up seeing a peak, we get dragged down by the economy and the markets crash. And particularly I'm talking about these unprofitable growth companies crashed in 2021. And honestly, they took down most of the NASDAQ with them. So let's go through the story of 2021. The year was characterized by a couple big events. Most of them ended up bringing some amazing returns to investors. There's a couple key things. Now, the first thing I want to talk about kind of happened in 2020, but it also does include 2021. And of course, that is Tesla. I don't think you could talk about 2021 in the world of investing and not talk about Tesla, because Tesla was really the amazing stock of the 2020s. In 2020, Tesla walked in. I have it here at about $46 a share. So $46-ish a share. Obviously, that's taking splits into account now. So maybe not exactly the right number, but $46 a share. And it peaked just at about $380 a share. So you can think, right, that's a 10x-ish return on investment for investors. Absolutely massive, split adjusted. Now, a lot of this run happened in 2020 itself. So I have it here that as January 2021 came, they hit somewhere in the range of 250, 260. But that still means that Tesla ran another $120 in 2021. And it also means that there was actually a huge number of retail investors who had just gotten into the market, who the first stock they'd heard about was Tesla, who had finally kind of broken the story of them being unprofitable and not being able to survive and taking in all this debt, had shown the world we have this product that people love, people want, we're going to change the world. And all of a sudden, investors were caught basically in a position where they're like, oh my God, I love this. This is a company I know. This is a cool concept. It's got this like cool leader who's like, living in the factory and doing all these things. Yeah, it was a massive retail stock, and retail investors won huge. Like I said, 10x plus returns just in 2020 through 2021. So that means if you were invested earlier, oh my God, your returns are fantastic. And there's actually a lot of really, really big names on this site on YouTube that started with Tesla. Think about somebody like Meet Kevin, even like a financial education, Jeremy Lefebvre, right? Like Tesla was huge for these guys, right? Like it just brought an amount of money they had never gotten from a stock before, right? It was the biggest like total dollar winner for most people. Now, the coolest thing about Tesla was that it ran so hard and you went up so fast, and all these retail investors who jumped on the train made money. Just about everybody who was a Tesla investor anytime prior to, like, let's say Q2 2020 made huge amounts of money. And even the people who were investing along the way up until 2021 were making huge amounts of money. You could have invested January 2021 after it seemed like Tesla had been running forever and still made $120 a share. Just fantastic numbers. Now, that was really special because all of a sudden, all these people who had invested things like their stimulus checks or their extra savings that they couldn't go and spend on vacation, or they couldn't go and spend on a thing to go out with, right? Like they didn't need to go out and eat. All these expenses just didn't happen. They had all this extra money. They invested it. They made huge amounts. And now they're sitting there at the start of 2021 and saying, man, that was a rush. What's next? And of course, if you remember 2021, you know exactly what came next. And that was the meme stocks. Now, I know meme stock can be something that people get really angry about. But really, I'm using that term because while I am talking about GameStop specifically, I mean, just in general, the idea of a meme stock, of a short squeeze play came next. And there was the meme stock, the king of short squeezes, and the one that got like illegally stopped. And there's this whole story there. GameStop, right? It flew up. And we're talking insane numbers on GameStop. I think we're talking, you could have turned $2 into $500. And the craziest thing was that brokers had to get involved to stop this thing from continuing. Now imagine, you had taken your $40, you had turned it into $280, you had invested it in GameStop, and you had taken it to 10,000, right? Like a 400x return or a 200x return, let's say, on your money. Right? You could have made just fantastic out of this world money. Now, how many people actually managed to time the tops and bottoms? Not many, but a lot of people were seen getting really rich really fast. And it was sort of known that these retail investors had made all this money, and it was becoming super, super popular to be a retail investor. And the reason why I talk about meme stocks in general is because the question then was, what's next? Right? Like, what's the next thing that's going to be like this? Everyone was looking for the next thing to jump on. And there were things like silver that people were like, oh man, silver is going to squeeze. And maybe it didn't. Of course, AMC, that sort of Q2 going into June ran up itself from like $10 a share. I have it to like 70 something dollars a share. 7x return, nothing to sneeze at. Not 200, but 7x return, massive. Right. So there were a couple other squeezes that happened in 2021. Investors were just foaming at the mouth to get on these different opportunities. Now, did they all work out? No. But the thing that a lot of these investors turned to after this sort of saga, after the meme stocks were done, was special purpose acquisition companies, or SPACs. So new companies coming on. I think Robinhood IPO'd in 2021, if I'm not mistaken. Big news there. And there was a couple other things like a couple of EV companies and stuff like that. But the real attention turned to cryptocurrency. Now, anybody who knows cryptocurrency knows that 2021, just like it was with so many of these stocks, was also an era of massive meme coin explosions. So the Doge coins of the world, just like the generic altcoins, but a lot of these were just like flying up because all these people had made all this money and were looking for the next thing. And it became cryptocurrency. And then it became NFTs. And if you remember the era where everyone was buying NFTs, and you would see in the news every week somebody had got rich. And I think that message to end off all this story, and yes, there's so many other storylines that happened in 2021. There's so many other stocks that exploded and went up a huge amount, including Shopify, which you talk about on the channel. But I think the end story is that if you were a new investor, which a lot of people were in 2021, you would have been sitting down, turning on your phone, and every day you would see stories of someone getting rich, doing some sort of trading, be it a stock, be it a cryptocurrency, be it a SPAC, right? And they had gotten rich. They got huge amounts of money, and there were stories and stories and stories. There were all sorts of influencers who wanted to talk to you about this, who were like, hey, I can show you how to trade this. I can tell you what the next NFT is going to be. I can tell you what, the next short squeeze is going to be, right? It was euphoria. And all of these investors suffered from FOMO. FOMO must have been the word of 2021, because that's really what it was. Everyone was so excited to follow each other into these trades. Did every trade work out? No, of course not. But while all this money was being made, there was an underlying unease, because as things started to go throughout the year in 2021, and we looked, summer came and went, and we looked at the fall, all of a sudden there was a single word that was scaring everybody, and that was inflation. Now, the governments of countries around the world, including Canada, the United States, Europe, had printed all this money in order to stimulate the economy trying to come out of the pandemic. And they really were in a position of real challenge, because people had all this extra money lying around. So they were willing to pay high prices. And there were all of these challenges with global supply chains, with just producing the goods that were needed. There was so much going on. And it was seeming clear by the end of 2021 that we were in trouble. Now, as much as I'd love to make a joke out of the word transitory, which was a word that Jerome Powell, Federal Reserve Chairman down in the United States, used a couple times talking about inflation, basically saying, "Oh, it's happening now, but it won't stay." Right? It means it's just coming and going. I don't know I don't want to go into too much detail about this, but let's just say the story of 2021, people made huge amounts of money in stocks first, and then short squeezes, and then cryptocurrencies, and then NFTs. And then as all these things had sort of hit these high prices, all of a sudden, the economy just pulled the rug. And a lot of these non-profitable companies started to fall. And they started to fall because the cost of goods was going up, because people were spending more money at home, right? Groceries cost more. So now you have to save money, or you want to, sell out of your investments, or just because the hype didn't last, because eventually there became not great news, and things weren't just all great, and we weren't just going to come out and have a brave new world, and the new normal was going to be amazing for everyone. No, that wasn't what happened. And so a lot of these companies' stocks fell, and fell hard, like dramatically hard. An AMC I talked about earlier, I think it's down like 90 something percent from where it was. And 2022 was brutal for a lot of these growth stocks that people had flooded money into. A lot of people lost their shirt. 2023 wasn't much better, but there was one company that made 2023 amazing. Now, in 2020, the word was maybe EV. We were talking about like new technology. 2023, the big word was AI. And I think you see where I'm going with this, because the one company that started its run in 2023 was NVIDIA. And just like with Tesla, you saw all of these investors who were coming out of this era of high interest rates, of inflation, were starting to be, they had gotten a raise to match inflation, or they'd gotten a better job, or they had cut their expenses, and they were getting a little bit of money on the side, and they were interested in investing again. And this time, what did they see? NVIDIA. What was the talk of Wall Street bets? NVIDIA. What was on every investing and finance and business news site? NVIDIA. And guess what NVIDIA did? Just like Tesla, it just rose and rose and rose and rose until it looked unimaginable. The gains from NVIDIA dwarfed the gains from Tesla. It might be the best stock of the last 10 years. And all these retail investors, even if you invested again, January of 20, this time 24, you still made huge money. Now, again, how many people timed the top and bottom? I don't know. But here's the crazy thing. As sort of the second quarter of 2024 came into play, so we're talking the spring, there was another stock that people were talking about that was now at about $10, and that there was a little bit of hype about, and that people, retail investors specifically, were like, oh, I remember this stock, and I'm going to put a little money into this. It was GameStop again. And this year, 2024, you saw an 800% squeeze in GameStop before it was brought back down, shot back up, brought back down, and now it's floating around. But again, these retail investors made huge money on a new innovative tech company, made huge money in a short squeeze. Well, what could come next? You see where this is going. Crypto, of course. We saw Bitcoin hit $100,000. And that's not it. We also saw all sorts of new innovative companies getting huge valuations. I mentioned SoundHound at the top of the video. This is a company that was, it's doing basically AI voice stuff. It's up, 300%? As of filming this video, I should say. It's up 300% in a month or two. Amazing. Palantir is up huge. All right, all of these growth companies. Now, most of them are more profitable than the ones we were investing in 2021, but that's not all, right? There's a lot of companies out here that are growing massively fast. Now we're seeing things like AI cryptos. I'm not going to dunk too much on that industry, but we're seeing huge moves in cryptocurrency, specifically things like altcoins. We've seen a couple meme coins. The hype is back. The FOMO is back. People are chasing gains in the markets right now. They're saying, I don't care about long term. I want to get rich. I want to get rich fast. I want to be like the people I can see on the news. And that has been the story now of at least the second half of 2024. Now, I am a social studies, basically a history teacher here in Canada. I know for a fact history does not exactly repeat itself. You're never going to get the exact same thing to happen twice. But you can get things that are very, very similar to happen again. And so the question now for all of us as investors, yes, 2024 has been massive. And yes, we've seen some incredible gains and some incredible runs. But are we in another bubble? Are we in another FOMO bubble? Is everybody YOLOing and doing this YOLO mentality? Are we in that same spot? And as 2025 comes around, what economic challenge might pull the rug out from under this run? That's the real question. Now, there's all sorts of things coming in 2025. We've talked about it a little bit on the channel. As a Canadian, huge political sort of question marks. As an American, you're not dealing with the same kind of question marks that we are, where you're like, oh, who's going to win the next election and what are they going to do? But instead, you have a new administration coming, right? And they're going to make some different choices, obviously, than the previous one. And the question might be, well, is this good for the economy, bad for the economy? The stock market seems to love what's happening in the States. So if the market's right, that's awesome. But for us as individual investors, we need to make specific portfolio-based decisions to help ourselves out. And so this is what I'm going to say and what I'm going to do for my portfolio looking at 2025. And this is just when I think about what would I have done in 2021 if I had been able to see that play out and go back in time and make different decisions. Well, the first thing I'm going to do is never allocate 100% to a non-diversified portfolio. One of the things I mentioned YOLO mentality earlier. One of the things that happened in 2021 is as we saw these single stocks or single cryptos or NFTs just running massively, people concentrated their portfolios. Because if you had been able to invest everything you had into a Tesla, obviously you'd have a lot more money than if you had had a 5% portfolio allocation. If you had put everything into one of the short squeezes, you would be rich. Another thing people did, options. I haven't talked about options on this channel. Options are a very sophisticated tool that can be used as a blunt instrument by retail traders. And it's not impossible to use it really smart, but it's really easy to use it poorly. It's really easy to bet against yourself. One of the greatest advantages we have as retail investors is time. We aren't beholden to shareholders. It's our money that we're investing ourselves. And so as long as we can wait, most investments can be great. I should put that, I like the rhyme. I should put that somewhere. But as long as we can wait, we should be okay. Now, options don't give you that option, ironically, right? Because you have a set day. And that is the day that your option expires. And if your option isn't in the money and you don't exercise that option, it becomes worthless. So by investing in options, you have the opportunity to multiply your returns and your losses. Now, investors had piled into options in 2021 looking for things to go higher, if they had been piling into the same options, like long dated leaps, so a year plus out, and had been betting against the market, maybe they would have made huge money. Am I going to do that? No. I don't think that's worthwhile for my portfolio. And if you're somebody who has a sophisticated enough or a large enough portfolio that you need to be worried about like hedging your portfolio using options, you need to find some more technical advice, because I am not the person for that. As much as I do use options sometimes for my own trading, I don't use them in big enough numbers to be comfortable sort of giving advice about them. What I do use, however, is risk management. And diversification is my sort of key factor in risk management. I love it. And I also know that diversification includes cash. That's one thing that I think we forget about a lot. A lot of us love to be 100% invested. Being 100% invested is something that is just such a historically great decision. As long as you are diversified, you buy the market in general. If you're 100% invested for all of time, you will, you're looking at Warren Buffett numbers here. However, at a time when interest rates are still pretty high, particularly US treasuries, and if you're investing in the US market, you're probably holding US dollars in a US trading account. If you're holding like a US treasury that's, a couple of months or whatever, short dated, that can be a part of your diversified portfolio, right? There's no reason to not do that. Of course, you could be holding bonds and stuff. I don't personally use a lot of bonds. It's just not something that I am as familiar with. It's not something I'm super interested in. Because I'm not at an age where I need to be worried so much about protecting my portfolio. Instead, I'm worried about growing it. Anyways, but having money in cash is great because, yes, I'm going to get a small amount of growth, right? Like whatever, 4% a year, let's say, on average. But also, I have the option to invest more without taking out margin or setting myself up to fail or setting a hard deadline on my portfolio or anything like that. I have the option to invest more when things eventually do go down. And at some point in history, things will drop. That is simply just how the stock market works. But as long as I hold on to that part of my portfolio, as long as I am smart, I keep myself diversified, I should be fine. And so I'm going to keep a little bit extra cash, sure, but I'm always going to keep a little bit of cash in my portfolio. When the market is rising, I might seem like an idiot for taking a couple percent in a short dated treasury. But when the market crashes and I'm able to allocate some of that into stocks that I love at cheaper prices, I'm going to feel pretty good. Now, the second question you might be asking, how do you know when it's time to buy if things do drop? You don't. You simply do not. The best option, in my personal opinion, is to spread out your investments and follow the sort of dollar cost averaging principle. There's lots of great videos about this here on YouTube if you want to look it up. But finding an average price over time is actually a really awesome choice. If you had dollar cost averaged into something like an NVIDIA, you would still be looking at amazing results, even if you didn't have the money to lump sum in at the start of the run. Same thing with Tesla, same thing with so many great companies. Do I recommend buying an NVIDIA or a Tesla when it goes down a huge amount? Yeah, maybe. But what I also recommend doing is taking the opportunity, if things get bad, to really research what companies you believe the most in and focus your portfolio. Again, I argued against concentration earlier, but if you're at a point where you're saying, hey, I've got maybe 5-10 companies I love that are going down, and I got 2 I'm going to hold forever, I think it's pretty obvious. I'm going to have the same amount of money. It's going to go a little bit further, and I'm going to buy the companies that I like the most. Another thing I want to talk about, don't chase a trend. When 2021 ended and we got into 2022, we saw the amazing roar of value stocks. They just came to life. We saw even an Apple stayed on top, but all these different value stocks that were really, really profitable companies just became the Wall Street darlings. The problem is, because they became Wall Street darlings, you are now being asked to pay a huge multiple on a value stock. Is it going to hold up better than a growth stock? Sure. But if you're a long-term investor, why do you care? As long as you're picking a nice growth stock, shouldn't you want the discount? Just my opinion. Don't chase a trend. If you see a new trend growing at the end of 2025 or halfway through the year as the sort of rally sort of sputters and we see, I don't know, maybe more inflation or geopolitical risk or whatever, don't chase the trend. Buy good companies, profitable companies that have fallen. That is, I think, the best maneuver. Now, a little bit of a scrambled video. Thoughts are a little bit all over the place. It's really hard when we're talking about these theoretical futures to really get things right on the head. But I really think, in conclusion, 2021 and 2024 have been really the era of FOMO. We've seen people just like chasing each other into these high flying stocks, into things that are going to the moon. And we're going to probably see a little bit more of that as we get into January of 2025. We'll see what happens, right? We might see a little bit of a lull and then roar back to life or whatever, right? The challenge is what happens at the end, right? What happens if the bubble pops? And I think the move for most of us is simply continue investing. Make sure you have some cash on the side. Make sure you can afford to hold your investments. Don't play with options. Make time your friend and be patient. Things might fall, but if they don't, that doesn't mean you shouldn't keep buying, because history rhymes, but it doesn't always repeat. That's all I have for you guys today. I hope you enjoyed the video. If you made it this far, please like the video, subscribe to the channel. It means a huge amount and doesn't cost anything. With that being said, I hope I see you in the next one.